Well, hello everyone. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee. It is Friday, January the 14th, 2022. This is your Status Chat, the second one of the year. Now, I don't know if you've heard. I'll get a little closer. They're expecting snow in Middle Tennessee this weekend. So, this might be a good time. Now, who was it? Was she Greek or was she Roman? I don't really remember, but I think it was Bovinius, the goddess of milk and cheese. And you might want to see if we have a plentiful supply shelf full of that, and make sure your refrigerator is stocked for this 1 day, 2 day event that's coming up. And we have most people have Monday off for recognition of, I think it's Martin Luther King holiday. So we want to send a shout out and congratulations to the Georgia Bulldogs for winning their first championship in 41 years. That's got to be a good feeling to get one win behind you like that and get things moving in the right direction. And of course, the Bama boys will be back next year. Now, this week we're going to try to keep this short, so we just hit right at this middle segment right now. Let's get to it. Well, here we are at the middle segment, and we're going to take very little bit of time today. Have two articles, and as always, any articles in the middle segment, the full link to that article will be found in the description of the Status Chat in which it appears. So here we have something from CNBC, and I have a second story up that we'll look at, and they're all about the same thing. The power of the media to shape people's responses. Here we have Mr. Powell spoke this week about trying to control inflation. And what have we talked about in the past? About you can't print all that free money up before it costs you in the long run, because it causes inflation. And ain't nothing free in this world. But what we got here is he came out and he spoke and just hinted that they were going to change some financial policy. Now, it just happens to be that the mortgage rates are not necessarily set by the Fed policy. But when the Fed talks about changing the interest of a lot of other factors in the world, it usually means it's going to affect the home buying market and people, simply because mortgage rates are going up, the costs are going up. With inflation, we've got insurance rates going up because they got to cover the cost of the new construction. Everything's going up, and it can really affect your balance. Now, if it moves up as high as they say, and you haven't found a home yet, you might want to go back, redo your finances, and figure out what you can afford, because I don't mind selling you a big, nice, fancy house. I'll enjoy that if that's what you want, but I don't want you to get into a house and then end up hating it because it's just too much and it's cutting into your lifestyle in other ways. So I would encourage all to look at the new rates. Keep in mind, maybe even go a little higher and throw a top interest rate and refigure through a loan calculator, see what you can do off of that. Now, we know that our last December's jobless rate increased a little bit, I think it was, at least we can say the job report came in significantly missing the mark with lower growth than they expected. And that's always a bad sign, because it's hard to get tax money out of people who ain't working. So what they want to do is keep everybody going and keep the economy from having this stagflation that may in fact happen. So here, this one just says key points. That's pretty well much all in this article. You can read the rest of it, but it says the average rate on a popular 30-year fixed mortgage moved decidedly higher, hitting 3.25% according to Mortgage Daily News. Last fall, mortgage rates dropped dramatically, and by February of this year, rates on the 30-year was about 2.75%. So, as they move up, if we continue to have the great migration, people coming from these overtaxed blue states to our beloved Tennessee, it's not going to help you with your inventory, because they're still going to be coming in with their out-of-town cash. And if your rates go up, it's going to be a little bit tougher to work out a new house. So you might want to work with somebody who's had a little experience in real estate for a few years. Now, there they're talking about what that first point was. I think we can skip past it. And if we come down here to this bottom here, we'll see for home buyers, given today's sky-high home prices, any move higher in rates is not only going to hit the monthly payment, but make it harder to qualify for the loan. Because again, they look at your equities, your ratios, and there's a whole host of them between your debt to equity and all that good stuff, which your finance people need to be your friends to keep you ready to pull the trigger when it's time to go. Now let's look at this other one. This one is the chair, still on the same subject, also from CNBC. You see, I forgot to introduce who did the other one, but this one's from Jeff Cox, and it was just very recent. Federal Chairman Jerome Powell said Tuesday that the economy is both healthy enough and in need of tighter money policy. Well, when you print that much money, you're going to need a little tighter policy. That likely will entail interest rates hikes, tapering off monthly asset purchases on a smaller balance sheet. So there he is. He speaks and the markets tremble. So anyway, it is not the end of the world, but it's something that if you stay on top of, you'll be in better shape than some people who won't have kept up with this eventuality. Because we knew that when they started printing out all that money and adding it to the money supply, that inflation was going to happen. Hopefully, we can see some changes in the next year or so that will drop some of these policies back to more productive versions and we'll be in better shape. But we can't count on that. So we have to plan on what we got today. Anyway, that's all of this. I'm not going to read any of it to you. You can go back to CNBC, find these out. I will give the credit. I got to switch back to this one to give the credit for this author. And it is by Diana Olick. Hello, I'm Dale Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Dale to Sell. That's one L in Dale, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. I think I want to say this though. You know, we don't know what's really going to happen. Is this the canary in the cage? Is this just overreaction to people just on just even the whispers of the Fed that things are going to go the way they're going to try to do some inflation tightening measures, which of course generally means higher interest rates. So we've seen mortgage rates tick up. Now it's wintertime, and it tends to be the slow time of the year. So if you're thinking about putting your house on the market, of course, you know to call Dale to Sell. But we need to get together and look to see what maybe some of the little freshen up looks that you might want to do. It's a good time maybe to touch up the painting, and maybe if the carpet is a little bit knackered, you might want to replace that and get that all cleaned up and into shape so that we can get you top dollar. Last week, 1722, we had 8124 in opportunities in the Real Scout system, down over the previous period. 3791 were the under contract still showing, and they also were down just a tad, and the ratio between them is 47%. So now let's look at this week. This week, 11422, we had 8136 opportunities. That's up over the previous period. We had 3772 in the under contract still showing. That was down just a tad, but the ratio between them improved to 46%. So there we are. I want you to have whether we get a foot or whether we get an inch or whether we get a little ice and slushiness, I want you to have a safe holiday weekend. And remember, call Dale to Sell.